or different components of financial system refer to the moral hazards and adverse solutions. And after that, I give you some case study refer to the problems happen on Vietnam and international financial markets as well. I just give you some case study refer to enrolled or banner models, negligence, or some current case study we refer to Trịnh Văn Quyết. That is we consider as insider trading, and that is also the failures of the financial market when the government or the regulator, they cannot control almost of activities or behaviors of participants. Okay, so now we first of all we are talking about structures of financial systems. Will you see my writing, students? Financial systems here. Could you see my writing, students?
Yes.
Yes.
Okay. And the first one, before we mentioned about financial institutions, that is one way we can connect between the savers and the borrowers. And in more detail, we divided financial institution into two main kinds. One we call the bank institutions. Bank institutions. And the others refer to non-bank institutions. Non-bank institutions. Okay, bank and non-bank institutions. So for bank institutions, the main roles player, we can say that is a appearance of Commerce Bank. Commerce Bank. Okay, and maybe you can see another kind we call the savings. The saving organizations. Or something is referred to credit unions, something like that. However, we focus on commerce banks. The commerce bank with the core business of commerce bank, they focus on they take deposits. Okay, and then they make loans to the borrowers. So that is the main services. And the others, maybe they can provide the other financial services. Including, let's say, the payments services, or let's say asset management, or something like that. Okay, and so that's based on this one. When we mentioned about the problems, before we're talking about the asymmetric informations. Okay, we have a second column here is referred to asymmetric informations. Asymmetric informations. So this happens referred to the commerce bank. It means that the borrowers, okay, the borrowers, they always have a better informations of projects or the future cash flows of the companies. And so it means that the savers or depositors, it means the people or the savers, they put money in the banks, they in a way of the less informations. Okay, and so in details, asymmetric information. Last week we mentioned that we have a problems. The first problem is referred to, we call the moral hazards. Moral hazards. or adverse selection, I should mention adverse selection first, and then we're talking about the moral hazards later. Okay, we have a moral hazards or adverse selection first. Adverse selections. Okay, and the other problem we have moral hazards. Here. So what does it mean about adverse selections amongst between the borrowers and depositors here? In theory, we say that the adverse selection is happen before the transactions. Before the transaction is mean, let's say we can have a timeline look like this ones. Here the time we sign the contracts between the borrowers and the lenders in here, okay? So in this time we call the days of the transactions days. So adverse selection is happening before the transaction days. It means let's say today's the bank agree to lend money to the borrowers. Okay, let's say the bank they agree or they sign the contract to lend money on capitals for the borrowers. Okay, for the borrowers. So what happens? You know that if both of them they sign the contract, it means that the bank they commit to lend money to the borrowers, and the borrowers again they commit to use money in the legal activities or legal project. However, we know that the borrower they always have better information, so that's why if they cheat, it means they not supply or they not submit the all document or all information to the lenders. So that's why sometimes the lender or the bank they cannot full information of client or the borrowers, and so that's why maybe leading to the bank maybe they make the wrong decisions. So what does it mean the wrong decision? You know that if we assess the clients based on credit scoring, they are the good the good client or good borrowers. Maybe you charge just very low interest rate, and if you assess the clients profile, you find out the borrower they are very risky clients. So maybe you need to increase the lending interest rate, because you know that the higher risk you need to take higher returns for them from the clients. And in this case, if you consider these clients they are running very risky projects, so that's why maybe you charge very high interest rate. However, because you cannot have a full information of the clients, so that's why even in fact the project is the client is very risky. However, you just understand that the risk is just normal or very low risk. So that's why you lending at very low interest rates. Or even if you know this project or client project very risky, you can refuse to lend money. However, because you have not enough information of client projects, so that's why even that is a risky project, it's still lending. It's still lending. So that we call the wrong decisions. And that is the outcome of adverse selection. Adverse selection is mean you maybe in theory we can say that the people they pay higher price for the low quality product. So in here, maybe you lending for the bad project, or you lending at very low interest rate for very high risky project. So in terms of the banking relationship between the borrowers and the lenders. So that we can understand about the adverse selection in here. In terms of the moral hazards, the moral hazard is happen after the transactions. After the transaction is mean after the borrowers they borrow money from the bank and they use support for their business. Okay, but during the time they use monies, but they use in illegal activities, but they don't inform to the bank or don't inform to the lenders. So the moral hazard is come from the borrowers. okay, come from after they get money and they use during the lending periods. And so that is referred to the moral hazards. And letters, when I give you the case study, refer to, let's say, Huyền Như or Bầu Kiên or Đức Kiên. You can see that's you can see the moral hazards when those guys, they're cheating in very complicated ways. And so that is the outcome of asymmetric informations. Refer to the first components of the financial system, which mean the bank institutions. The other kinds of financial institutions refer to the non-bank institutions. So the non-bank institution, including the first one is the main players of non-bank is investment bank. The other ones is maybe investment firms or companies. Sorry, investment fund. Could you follow me, students? You should follow me because later you have a different case study to explain detail in this one. Investment funds, or maybe we have insurance companies. Insurance companies. Okay. Now the first one we're talking about investment bank. Investment bank, or in Vietnam, is referred to security firms. Security firms. Could you see my writing, students?
Yes.
Okay.
Yes.
Investment banks. So investment bank or security firm is totally different with commercial bank. Investment bank, they are not allowed to take deposits or make loans at the commercial bank. Investment bank, they just provide the investment services for clients. They just provide investment services for clients or to the investor. So what kind of investment services here? So the first or the main investment services, that is we call underwritings. That means about like phát hành rates. Maybe you learn from security markets. When we're talking about primary markets, it refers to issuing security, including bond stock for companies. So that's why the issuing firms or the company or the government, they invited the investment banks to become underwriters for them. Okay, and the other is they provide the brokerage services. Or investment consultants. Or let's say assets or portfolio management for clients. Okay, and the other one. So when you look at this one, you can see the investment bank activities are different with the commercial bank. They have no activities referred to the deposits or lendings. Okay, they just provide investment services, or they are the trusts, or they are investment intermediaries in economies. They are not allowed to take money from savers and cannot lending to the economy like commercial bank doing. So that's why we cannot make mistake between the investment bank and commercial bank. And in Vietnam, that is refer to security firms in here. So what happened if we're talking about asymmetric information referred to investment bank in here? So investment bank is mean one side we have an investor here. Investors, let's say we explain in terms of underwritings. Okay, investor and underwriters or investment bank, they stand in the middle between investor and issuers in the economy. So we know that it means the investment bank, they try to help issuers sell security, including bond stock, to the investor. or against the investor, if they invest or they use money to buy or sell stock, they need to do via investment bank. So in this case, we know that investor, they are also in the less informations. And issuer is mean they also the same situation. The borrower is mean they have a better informations. Okay. And so what happened to the adverse selection? Adverse selection is mean here. We also have a timeline the same in here. Here the transaction days. So we know that issuers, they always have a better information. It means issuer, they are the people, they use money from selling stock or selling bond. Okay, so that's why they know where money go, or they know how they use money support for the project or support for the business. And so that's why the issuer, they know exactly the qualities. They know the qualities of stock or bond. Or it means they know the quality in here is referred to the risk levels of stock or bond. Okay, and the investor, they have less information. Is mean because you are the buyer, and you know that the buyer, they always in the best situation to get informations. So in relationship between the buyer and seller, we know that they buy and sell in here stock and bonds at the fair price. Of stock and bond. The fair price is mean both of them they have a same information. So it's mean the price of stock is equivalent to the risk level of those stock or given stock. However, let's say stock of the company contains very high risk, but investor, because they have not full information, so that's why maybe they pay very low price or very high price to buy the best qualities of products. Or let's say the stock contain high risk, need to provide higher returns. However, because the investor, they don't know about that, so that's why they just require very low returns, but they need to take higher risks. So that is referred to adverse selections. And the moral, the same meaning is mean issuers after raise money from issuers. So maybe they support for their business, but we don't know that is illegal or illegal activities. We just believe in the issuers. Okay, so that is adverse selection, and more others happen in referred to the investment bank. For investment funds, investment fund is that kinds, we have a lot of funds in the markets. Now let's say we have hedge funds. Sorry, we have a mutual funds. We have a hedge funds, or pension funds, the other here, or ETF. And next lectures, we will discuss more detail about this one. However, we can understand investment fund look like, that is, the fund is mean the financiers, intermediaries here, the funds. They collect money from retail investors. Okay, retail investor, they contribute money. Retail investor is mean the people, they have the less information, they have not much knowledge or experience to invest on stock markets. So that's why you contribute money into the bank, into the fund via buying the certificate of funds. And then the fund, they collect money from client and invest on the financial market, or fund managers. They invest on behalf of the retail investors. Okay, so that is the meanings or the main characteristic of fund managers or investment funds. And based on this one, you can see the funds, they just only provide the assets management services or portfolio management services for retail investor. And once again in here, asymmetric information happens if the retail investor, they also have less information compared with the fund managers, because those persons, they use money to the public. Okay, so in here we can say investors They are in the case of the less informations. And fund managers, this means they are the people who have a better information. And later, you discuss about case study refer to Nick Lessons or Bernard Murdoch. That is a very famous case study refer to the fund manager cheating. And how they choose based on because of the moral hazards. The fund managers, when they invest, when they use money to invest on the markets, they get lost. They get lost. However, the cheating is mean they not inform no information to retail investor. So you and me, let's say we are retail investor, we don't know the best performance of fund managers. So that's why we keep invest or we keep contribute money to the fund managers. And finally, the fund fails. It means they collapse. And at that time, the retail investor, they lost all money. And you know the difference between the fund and the commercial bank is mean if the commercial bank collapse, maybe you can get a part of the money from the central bank. However, for investment fund in here, you get nothing because the fund or investment fund, they have a no supporting from the central bank to repay money for the retail investor. Okay, insurance company. I think this one is easy for you to understand. Later, some of you maybe discuss or you give examples of adverse selections or more others refer to the insurance. So that's why I'm not mentioning here anymore. Okay, so that is the first component refer to financial institutions. The other ones is refer to financial markets. Financial market. Okay, so financial market in detail, we have a money market. Money market. Okay, and the other one is a capital market. Capital market. Capital market. And in detail, maybe you can have the debt market. Market. Okay, or we have stock market. And one more point here, maybe we have a derivatives markets. And on those markets, you know that's that either they provide the investment services on the markets, and that is the relationships between the investor and issuers. So investor once again is also the person have a less information compared with the issuer. It means they have a better informations. And moral hazards happen if the issuer, the cheating. The cheating is again the same with they borrowing money from the bank. In here, they get money from investor, but they use in illegal activities, or they tell lies, or they cheating in the way they inform the balances or income statement to the public. Okay, or an investor and investor, they are always in the best situation to receive everything from issuers. Okay, so in asymmetric information, the same in here. Investor, they have a less, and issuer, they have a better. And more others happen if the issuer, the company or the governments, they cheating in the way they use money. And adverse selection is mean because the investor, they have a not full information of client projects or stock or bond. So that's why they pay very high or undervalue or overvalue or overpriced for very high or very low risk. Or I mean here, they make the wrong decision or wrong investment decisions in here. And so that's, we have the last one, we have regulators here. Regulators to control the problem happens on the financial institutions, or they control the problem happen to financial markets. So the first ones, they control the adverse selection, or it's mean in here we can see how regulators, they reduce adverse selections. Okay, in here, they need to reduce adverse selections. Okay, reduce adverse selections. Okay, so in fact, the government they can use some main ways, some main solutions to solve the adverse selections, the adverse selections. So the first one we say information productions. Okay, informations productions. Information productions. Information for productions. So what does it mean? What is the detail of these ones? One of the problem you know that's if we want to reduce adverse selection, it means we need to make sure both sides, including the investor, issuers, or borrower and depositor, they need to have a full information at the same time, even that is a private information. Okay, even that is a private information. So that's why if the government they want to reduce, they use one of the way we call information production. It means they want to reduce the problem we call free rider problems. Free riders. Do you know free riders? Free rider is means the guys they pay nothing but they get benefit. Okay, so in here, when we're talking about the price of stock, let's say price of stock or bond. Okay, even you are the buyers, one side the buyers. Okay, and the other side is the sellers. Both of you, we need to pay that is a fair price. Okay, fair price. No one want to pay unfair price. Mean maybe you buy at very high price, or the seller they sell at a very cheaper price. They don't want to do that. So free rider is mean maybe the sellers they sell at very high price or expensive price. Or the buyer they can buy at a cheaper price. Compare it the true value of stock. Whenever it happens, one of both sides have the cost or is unfair for the other ones. So that's why the governments or regulations they make sure both of them, I mean the buyers and the sellers, they can have ability or they have an opportunity to pay the fair price for the true value of stock. No free riders in the relationships. Okay, so that's why the government they need the issuer, they need to public all information. So we can call disclose informations. And you know that the company they can disclose the quarterlies or annualities or even the urgent report to the public whenever the company have a problems. So that is the first solutions. The other one we call collectors. The other one we have a collectors solutions. Collateral is mean the seller or the issuers or the borrowers. They need to take their assets as collaterals. And so if they fail in repay money to the buyer, they must sell that collateral to repay money to the borrower or to the buyer or to the lenders. Okay, so you know that's almost at the commerce bank. They always require the collaterals if you want to get loans or if you want to borrow money from them. And even for on the stock markets, they also require the companies or the issuer, they need to have a collaterals if they want to raise money. And one more solution in here is mean the governments, okay, the governments, maybe they give us some regulation we call as the punishments. Okay, if one of them's cheating or one of them's tell lies or they not disclose information, maybe you need to pay money, or you need to maybe you not allowed to invest on the market anymore. So that is the case study referred to some week later, when the guy selling, because the guy belonged to the insiders trading, but when they sell stock, they don't tell information, that they not information to the public. So that is we call that is the cheating activities. And after that, the guys they receive a punishment from the security commissions, actual commissions. Okay, so that is some solution to reduce adverse selections. Refer to the moral hazards. So how we can, so what is the solution to reduce moral hazards? To moral hazards. So of course, the governments, they also use some solutions to reduce those problems. The first way is they call active monitoring. The other one we call they require to regulation on information disclosed. Regulations on information disclosed. And maybe they use, let's say they use the debt contract, or financial contract. They use contract to make both sides, when they sign the contract, they need the commitment, fulfill their obligations on time. If they cannot fulfill their obligations, so maybe they go to in the jails, or they need to pay money, or they need to sell their assets to repay monies. Okay. Activity monitoring is mean we call that the way the government, they control strictly on the insider transactions of the issuers or the insider tradings. Okay, and regulation on information disclosed the same way they do for the adverse selections in here. Okay, so that is some key terms, some key solutions will be used to control those problems. And if they control adverse selection and more others, and finally they can reduce asymmetric information happen on the market. Okay, so that is all main contents referred to the whole structures of financial systems. What are the main relationships and what has happened, and how the government they involved in those financial systems. And now at the time I give you some case study refer to different components of financial systems. I list here some case studies first, and then I require you to do detail letters. Now I have a case studies. The first case study is we call Enron. The second ones are referred to the Lehman Brothers. The next ones are referred to Benomodok. Very famous case study in the world. The fourth, maybe Nick listens. Can you see my writing, students? In Vietnam, we have Nguyễn Đức Kiên. Các bạn có nghe được cô nói không nhỉ?
Có.
The 6 is Huyền Như. Okay, the 7's Trịnh Văn Quyết. Okay. Mình có 8 nhóm em nhỉ? Mình có 8 hay là 9 nhóm nhỉ? Lớp mình ơi. Lớp trưởng ơi, mình có mấy nhóm em nhỉ?
Alo, cô em được ạ?
Để cho xem mình có
5.
Mình có mấy nhóm ạ?
Lớp có 5 ạ.
Có 5 nhóm. Okay, 5 nhóm. Thế thì mình sẽ chọn 5 nhóm. 1, 2, 3, 4, 5. Thế thì nhóm 1 nhá. Nhóm 1 làm cho cô group 1 này. Group 1 này. Bạn sẽ làm cho cô về cái này. Group 2 này. Group 3 này. Group 4 này. Và group 5. Đấy. Đây là 5 case study rất là nổi tiếng. Bây giờ việc của các bạn là gì? Các bạn hãy giải thích cái case này. Những cái case này các bạn tóm tắt những cái case này trên thực tế này. Nó gắn để xem là nó thuộc về moral hazards hay là adverse selections. Bạn thử xem cái case này nó xảy ra là do moral hazards hay là adverse selections. Các bạn lưu những cây này lại vì sau này mình thi mình cũng sẽ lấy thông tin từ cái này. Ví dụ cô sẽ yêu cầu các bạn giải thích moral hazards hoặc adverse selection bằng cách sử dụng những cái thông tin từ các cái case study này. Thì bây giờ mình sẽ phải xác định xem là giả sử như vụ enroll thì enroll hoặc là cái vụ case study liên quan đến Bernard thì nó xảy ra là do gì? Do moral, tức là do vấn đề từ cái vấn đề đạo đức, đúng không ạ? Thì bạn sẽ giải thích nó xem là vậy thì nó xảy ra như thế nào liên quan đến cái này, xem nó xảy ra như thế nào, và sau đó thì bạn kết luận cho cô xem là cuối cùng cái cây đấy thì cái solution nó đã được xử lý ra sao. Tất cả về thực tế, chúng ta không nhắc lại lý thuyết nữa. Ví dụ đối với Murdoch chẳng hạn thì cái solution là gì? Ông ta đã bị trừng phạt như thế nào cho cái hành vi moral hazard của mình. Đấy. Hoặc là ví dụ như vụ Huyền Như thì giả sử nó thuộc về moral hazard thì nó xảy ra như thế nào, đúng không ạ? Và sau đó thì cái hình phạt và là cái cách xử lý đối với cái cô ấy như thế nào, cái solution ở đây ra sao khi mà chính phủ đã thực hiện control các cái hành vi đấy trên thị trường. Các bạn rõ câu hỏi của cô chưa nhỉ? Club ơi. Các bạn sẽ ghi những cái cây này lại, các bạn sẽ tóm tắt cây lại trên cái bản Word của mình để sau đó các bạn trình bày đồng thời sau đó các bạn sẽ lưu cái bản đấy lại nộp vào trên Classroom ấy. Thì sau này cuối kỳ các bạn lấy lại những cái case này để các bạn làm bài thi để các bạn đỡ phải tìm tài liệu lại. Được chưa? Cô để cho các bạn khoảng 20 phút nhé, 15-20 phút. Sau đó chúng ta sẽ summarize lại và chúng ta sẽ trao đổi với nhau. Các nhóm rõ chưa nhỉ?
Vâng ạ.
Cô break Zoom cho bọn em nhé.
Vâng ạ.